All right, gonna go over. We're going to go over market and this how this occurred and how predictable it was. So in advance, I had marked this level. It's in very light blue. It's on the top chart because I knew it's gonna go there. Right? I mean, there's a tendency for the market to test, test, and retest. All right, so this was a blue line right there, right? And what happened was the breakout. Did I put the breakout? Was right here. So a lot of times you'll see this behavior where you have the breakout. This was the breakout. It got tested and then got retested. So I mean, what do you think is going to happen if the breakouts are already tested and retested? If it's been tested and retested and it's again going down, one option is going to make a higher low and the other option is going to make the same low or a lower low. But I think it's going to go lower low. Why? Because this just experience, when it tested and retested, it means that the buyers already filled there. The buyers already filled there. So where are the buyers? They have to be lower at better prices, right? So that's exactly what it did. It went one lower, right there. And that tested the low bar. Where's the low bar? Where's the low bar? This low bar. So you're going to see this many times where, everybody knows test and breakout, breakout and then test. But if the market doesn't go after like the breakout and test, guess what? It's going to go lower. That's very highly likely. Why? Because the buyers, the break and test folks or whatever, they've already been filled. So it went a little lower, hit the low bar, and now you're going to see what happens. Market's going down, 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 right? Now you have this. That right there is buying. That right there is a real change of behavior, and I have explained this in the prior videos. All right, you don't just say any buying and selling wave is change of behavior or a sign of strength or sign of weakness. You need filters. You need to filter the buying to see if it's a sign of strength. Because sign of strength or sign of weakness or change of behaviors or whatever, they have a tendency to occur at certain spots. If you understand those tendencies, you'll be able to better judge. Right? Yes, this is a change of behavior, or no, this is not a change of behavior. This is a change of behavior. Why? One evidence is that the market on a higher time frame hit a support level and is not willing to go through, and instead of the selling pressure that's supposed to cause the breakdown, you get buying pressure on the upside. So instead of selling pressure, you're getting buying pressure. So they're not ready to break down. They're going to buy. Why? Because they want to go higher. Why? Because it's never their intention to break the lows. So that's the basic logic here. If you have a resistance level and it goes to resistance and you get selling, what does that mean? That means strong hands don't want to break out. They want to sell resistance. They don't want to break out over resistance. They want to sell it. Similar logic right here when it goes to support, and instead of getting heavy price volume breaking down, you get instead buying. That means they want to buy and go up. They don't want to break down. So this is the evidence, this is the print, bang. Alright. So you had support, the buying pressure comes in. Now because it's at that level, that's a data point or filter to indicate whether that buying pressure is a change of behavior or not. That's the point. So understand this. Many, many times you see folks, they're looking at, this is a change of behavior, this is a sign of strength. But they don't understand that that it could be something else. Heavy buying doesn't mean it's a sign of strength, and heavy selling doesn't mean that it's a sign of weakness. Okay, this is one of the biggest mistakes white collar traders make and they lose money on is they look for a trend that's going down. Yeah, they look for a downtrend, and then they see this big price volume wave and they say, oh, that's a sign of strength, or that's a change of behavior. The other mistake they see is, okay, market is going up, 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 and then it goes up on heavy volume. Oh, that's a buying climax. That's incorrect. Because that heavy price volume wave at the top of a trend could be a breakout on a higher time frame and not necessarily a climax on a lower time frame. So folks don't, understand this point, and that's why you cannot judge the market mechanically based on just price and volume and just one time frame without understanding levels and then other things as well. All right. So here the level is support. The buying pressure comes in. Biggest price volume, 49 waves. That is clear buying. And then it takes out this upper band right here, which is telling me that basically it's likely to trend. Why? Because it shot up. It made distance, right? It's the buying is not effort. It's making distance and broke the trend line or whatever you want to use. So for example, if I draw a trend line, or there was this one here, it would have broken definitely. Or if I want to do another stupid trend line here, it would have broken, right? So it doesn't matter how you draw it. I just get sick of, I don't want to draw lines. So so anyway, the point is that the trend is broken, and I'm not a trend line fanatic. I just know that it is one of the buying and selling tests, and it's actually, I've come to appreciate it a little bit more, but not the way you see online where they do this AA, BB, CC, just trying to put a trend line, so many trend lines all over the place. That is totally useless, and you're not going to make any money off of that. It's just over analysis, because market momentum changes all the time, right? If market momentum changes all the time, then the rate of acceleration is changing, and you're going to keep on drawing different trend lines. So what's the point of drawing AA, trend line AA, trend line BB, trend line CC? There's no point. It's pointless. So anyway, come back to this. You have a support level on the higher time frame. You have a change of behavior from that supportive level that breaks the band. Because it breaks the band, you have a trend change. You can see that it's breaking out above the highs as well, right? And then finally, you can confirm it by using some type of additional indicator. But it's better if it's not. You can use a correlation or something that's not a derivative of what you're already seeing. It has to be a separate, different thing, all right? Because if you're using the same thing and just adding another indicator off of the same price and volume, it's too highly correlated. When one says go, the other one will also say go. So why not use one instead of two? It just doesn't make sense. All right. So over here you have that. You have the buying pressure over here, 221 stocks rallying, and you also have a lot of volume coming in at this 16. I think it's a 1.6 million or 16 million. I forget. But the point is, this is the biggest in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 plus waves. So you got the buying pressure coming in. So what do you think is going to happen, especially after it makes a higher high? Price is going to go up. Why? Because I'm showing you number of things. One is the level on the higher time frame. Two is the change of behavior on a lower time frame with a significant break, meaning it makes price distance. So it breaks that downtrend. Three, also additional indications that are helping support that. So now you can make a logical conclusion, at support, buying. What does that mean? That means the edge lies with the buyers. This is not a random flip of the coin. Right? This is legitimate edge supported by stocks in the market moving in a particular direction, money going in a particular direction, the futures confirming in a particular direction, and the market at support, which is also, which support is support. So you have all of that, and telling you that the chances are the market will go higher instead of lower, and that's what it did. Right? Similarly, on the resistance side, if it's going, you see the high time frame is resistance. Okay, now what? Now we look. Okay, they're selling. All right, but does it break the band? No. Then later, does it break the band? Yes. Now what? Short, bang, and it goes down. So at resistance, change of behavior. This is the more valid one, because you see it has to break the band. The brand is just, it's not a magic band, but all it's doing is it's a measuring tool that allows me to see that price made progress. That's it. All right, it's the heavy selling made progress, because you see a lot of times you'll have heavy selling, but it's not making price progress. What does that mean? That means that the buyers are on the other side, and it could be effort, and that effort is going to result in a continuation up. So here, that's not effort. You're making progress. You have the breakdown, you have the test, and it goes. And that's all she wrote. One trade, two trade. So this is just support and resistance trading. Wonderful to trade this in a range. You want to trade this in a range. And that's about it. All right. Take care, guys. Bye-bye.